This past week, I made $26,000 trading CPI, and it didn't take me a whole lot of effort. In this video, I'm going to provide a full trade breakdown so you can understand my thought process, risk management, and trade management. But first, if you're new to the channel, my name's Kyle, and I've been trading since 2011. And just in these past few years, I've made over $1.3 million using prop firms. If you don't believe me, here's some of the receipts. I used to make every mistake in the book until I ironed out a simple process that I'm about to share with you in this video. So without wasting any more time, let's get right into it. All right, so let's dive into the actual trade that I took. You guys can see that I made about $1,400 across all of my Apex accounts. So what I'm going to discuss is a very simple framework when I'm looking for as after we've taken out, an old range high. So really the whole premise of this trade is external range liquidity back into internal range liquidity. So what I was looking at on NQ was an old high. So we had an all-time high being rated. So after we've taken out the all-time high and we get some signatures that price is failing to displace any higher, what I'm looking for are any signatures that we might get just to trade counter trend and trade back into some level of internal range. And that's really all I'm looking for. When we reach extremes, when we have, major swing points being breached, whether that's an old low or an old high, I'm looking most of the time to just counter trend and get a quick, intraday day trade or scalp in trading back towards internal range liquidity, just because I know that markets will become exhausted at these major swings. So really what I was looking at was prior days leading up into CPI, and then I was looking for the reaction from CPI, and when I go over the trade, I will actually show you guys that I took a loss ahead of time. I did have some confidence that the market was going to trade lower. I did take a trade ahead of CPI, which probably shouldn't have done, but it's all part of managing risk and it's all part of learning lessons. And, we can't always predict what the market's going to do. Sometimes CPI will run straight to our targets. We don't have to worry about getting stopped out. And then sometimes we have to be confident in the analysis that we're doing and just re-enter the trade. So what I was looking for was some intraday liquidity be swept out, after I'd taken a stop loss. So after I got knocked out of my initial position, I was still looking for indications that I wanted to remain bearish because we had already taken out the all-time high. I just was looking for any signatures to get short again. So after taking a 1 hour loss, on the second trade, I actually sized up because my first position was a very, very small position. And that's part of having dynamic risk management, where if you're trading ahead of a high impact news event, you might want to just go in with a very small position because you don't know really where that market's going to go. And I argue that, putting out feeler positions, and many experienced traders have talked about this before, they put out feeler positions just to get a feel for the market. That way, when they decide to size in, they know that they're on the right side of the market. So initially, my first position that I got stopped out on was only on 3 micros. And then the subsequent position that I took, after I got more confirmation that the market was going to trade lower, I was able to size in up to 9 micros, right? So almost a full contract on NQ. So I was looking for some intraday liquidity to be swept out, a rejection from that level, and then trading down into internal range liquidity. So very quickly, I have just a snapshot, and after I go over the snapshot, I will provide the actual live stream that was recorded for all my Discord members. So just breaking down this market, right? We have an all-time high back here. We had taken that out a couple days after the election. So you guys can see back here, we had our elections on Tuesday. And then Wednesday, Thursday, we got a massive pump higher, taking out that all-time high. But if we struggle to press higher from that all-time high, really all I'm looking for is this all-time high is going to be our external range liquidity. So ERL. And then all I'm looking for is it to trade back down into IRL. So this buy-side imbalance, right, becomes my IRL. This is my internal range liquidity. And really it's just a retracement after we get a large expansion, taking out that previous swing high. As you guys can see down here, this is that old swing high taking out. I'm looking for just a retracement back into a reasonable level that makes sense just to fill in some of the range. And when I actually share the live stream, you guys will actually see that I have much deeper targets to the downside, but we can always discuss that, or you guys can analyze that on your own. So the reason why I was bearish, all right, and you guys can look at the daily candles. These days closed bearish. Okay, so we had 1 day bearish, 2 days bearish, and you guys can see that the displacement has all been to the downside. So after we taken out that all-time high, we're getting displacement to the downside. We're getting this massive displacement, which created this 1 hour fair value gap. All right, this day on Tuesday, we took out the Asian range high and then displaced lower, giving us a market structure shift. So prior to this day, we hadn't had a market structure shift. Okay, so this here is not a market structure shift because we did not close below that old low. We did not close below that daily low. This here gave us a market structure shift because we did get a closure here. Although it did run higher, this is just the part of trading inside of CPI or the day before CPI. You might get a lot of choppy price action, and oftentimes you're best not trading on days like this. So if you got chopped around on this day, just know that Wednesday is CPI. All right, so you guys can see that I did short during Asia, and I actually did have my stop loss here at this intraday liquidity. All right, just because we had already ran up to that sell side liquidity, this sell side imbalance, and we had already rejected away from it. So I was pretty confident that I was going to take a small position. You guys can see that I took 3 contracts, and I had my stop loss above that high. All right, so you guys can see this is when I got stopped out. I have buying 3 contracts at 2-1-13. That's exactly where my stop loss was, just above this intraday liquidity. There might have been a little bit of slippage because of CPI, but after I got stopped out, all I was looking for was this 9 a.m. candle. Okay, so this is actually 8:30 candle leading up into 9 a.m. And then this is our actual equities open. So what I'm looking for is price to just start rejecting these levels in here. And what I was looking at was this raid on this liquidity, okay, and the retest of the weekly open. So you guys can see how many times we've retested that weekly open, all right, with the expectation that we were not going to take out this previous daily high. So this is Tuesday's high all the way back here. So you guys can see where I re-entered the market around here. My stop loss was at the previous daily high, just because I had ultimate confidence that I was going to be bearish on the day, and that we were going to start targeting some of this internal range liquidity. And that's really all I was looking for. So you guys can see when I entered, I re-entered with 9 contracts. I still had 3 contracts open, which I did close shortly after this screenshot was taken. I took off 6 contracts for about 450 ticks, and then the other remaining 3 contracts at about 500 ticks. So just a very short breakdown of this trade. It was very simple. Not a whole lot of moving parts. I just have ultimate confidence in my analysis, in the analysis that I'm getting from the markets, from actually live tape reading. And when I see this long hourly candle wick, leading up into the 9 a.m. candle closure, then I have pretty much a very strong confidence that the market does not need to go back up and retest some of these levels. So even after taking out this intraday liquidity here, right, you could very well move your stop loss down to where that old high was. So this old high, after it closes back down inside of it, this stop loss that I have up here could get moved all the way down to there again. Just because when you're trying to trade a turtle soup setup, which this essentially was, we're rejecting this swing high, you should not see price come all the way back up there. And it didn't. It did slightly on this next hourly candle, right? So this is our 9 a.m. candle leading up into 9:30. And then by 10 a.m., this is our 10 a.m. closure. This is right around, I don't know if it's going to say the time. I mean, this candle, I believe it only took 15 to 30 minutes to make this run lower. So it's probably around 10:30 where I closed out all of my positions. All right. So I hope you guys enjoyed this breakdown, and I will dive right into the live stream so you can get more of my commentary. Morning, guys. All right. I'll just kind of hop right into it. So I took a loss early on NQ. I probably shouldn't have entered early. But I did want to see it respect this swing high up here. In fact, we actually went up there, took out that swing high, and this is the reason why I re-entered, was because we got this rejection from this intraday liquidity here. So this was yesterday's PM session. And ideally, The reason I'm still short is because we've already taken out external range liquidity. So if we check our daily charts, we've already taken out external range liquidity, and I'm really just trying to target some of this internal range because we've left behind a lot of imbalances back here. So my thought process is that we are quite a bit overextended at the current moment, and really I'm just looking to play this back into some internal range. That's really all I'm looking for. I think a lot of buyers are going to be trapped above those all-time highs. So even a run, below yesterday's low is not asking for a whole lot. Really, essentially, it's just, just trying to target some of this range that's really traded higher since the election, right? So mostly counter trend, but the bias really came from yesterday's closure, which I was gonna update you guys with a video, but I figured, today talking about it live might be a little bit easier. So really the confirmation was we actually did get the market structure break that I was looking for at noon yesterday. So you guys can see that we ran up into that 1 hour inefficiency. We took out Asian range highs, just very barely. So we took out the Asian range highs here and then broke down. So this was our Asian range raid. So really all I'm doing is following the price action that we're seeing Monday and Tuesday, right? There's a lot of selling that's coming into the market. So we have this displacement, we have this displacement from yesterday. So really I'm just looking for another move lower today. And based on the previous day's closes, right, they've both been bearish. So I'm not expecting that the market's going to continue higher. Really, I'm looking for lower prices still. All right. And I did size up on this additional position. So looking to mitigate the loss with a better entry. That's really all I'm looking for. And I think with this next 4 hour close, I'm just really looking for a strong 4 hour close. And on the 1 hour, we put in a nice long upper wick. So I really don't want to see the trade back to this buy side liquidity. So 50% of this wick, I'm looking to for the markets to respect and just continue trading lower from here. No, I'm not looking at that as Tuesday low of the week. I just went over all the whole reasoning why I'm bearish. So I'm not expecting that to be Tuesday low of the week. There's just, in my opinion, there's too much inefficiency down here that needs to get filled in. I could be wrong, yes, but when I'm trying to weigh the probabilities, I'm leaning short over long for a reason, all right? We've already taken out all-time highs, and the daily closed back inside of the range. This is my whole reasoning why the market is probably going to fill in some of this range here, right? Because we failed to displace above a swing high, right? That is enough information to tell us that we shouldn't be expecting continued prices higher, all right? From a probability standpoint, it doesn't make sense to expect a Tuesday low of the week. Yeah. And really, if we look at the daily, this is just a retracement to fill in some of yesterday's candle. We've taken out all this liquidity here. So we've taken out these equal highs here and then have since sold off. And essentially, that's the same analysis that I'm trying to anticipate on the index markets. All right, we're taking out some buy-side liquidity and looking for lower prices. All right, so we're looking at this CPI candle as a manipulation. I mean, I kind of went over my whole reasoning. We've taken out the buy-side liquidity. Yesterday, we had a shift in market structure lower. All right. And I think we're overextended. This is our all-time high back here. All right. So the fact that we haven't really shown any willingness to trade higher, all right, automatically puts me on the other side. I'm trying to get you guys to think really opposite to what most people are going to try and do. They're going to try and buy it at all-time highs. All right. But as soon as we get the confirmation that we're failing to displace higher, the only other logical solution is that it's going to trade back into internal range liquidity. And we have a lot of internal range liquidity here. A lot of internal range liquidity. All right. So even if you draw a Fibonacci here, right, we are at a major, major premium. So why would I possibly want to go long or think that this is going to be Tuesday low of the week? That has a very low probability of it working out in your favor. Also, I went over the reasons why the market's been bearish. We have displacement showing up on Monday and Tuesday. Where's the displacement higher? There hasn't been any. All right, so we're just following order flow. I'm just looking at the 830 run as manipulation. That's all. So we want to see if we invert this buy side imbalance here. You can pretty much see how it went up, tested that. You see how we're struggling at the weekly open? How many times we've gone up there, tested that level, and have failed to break lower. All right, it's all sitting at this 1 hour sell side imbalance. I'm going to look to manage my stop here a bit. Possibly move to break even. Currently up 225 points. I don't really wait for candle confirmations. I honestly kind of wait to see how the market responds at specific levels. So as we're trading above buy side liquidity, if I see it kind of struggling there, I'm mostly just entering positions. But it all depends. If I'm trading fair value gaps, I want to see that the market respond. Analogy, I'm not really looking at the inverted fair value gap. I'm just looking at the rate on this liquidity here and the response from it. If you're talking about this one, this to me doesn't really have any significance. I got my stop right around the second standard deviation here. Yeah, you could definitely do that. Like I already mentioned the daily candle that I was looking at. So we already got the failure swing, right? We traded above the all-time high. This next candle is the confirmation that it's failing to displace higher, right? Because we're trading back inside the range. Today, all I'm doing is selling it above the open. That's really all I care about. Can I get a position on above the open? It doesn't make sense. All right, so all your trades have to make sense from a daily perspective, or some level of high time frame perspective. All right, so going over the reasonings why I'm shorting the market, right? The failure to displace above the all-time high, the displacements that we've seen from Monday and Tuesday, and then this run on buy side liquidity. So this hourly wick, that's really what my focus is. You know, how do we trade post CPI? Is CPI just a manipulation? Because if it fails to go higher, and if it fails at the previous day's high, so far it's failed at the previous day's high, right? We didn't run above that daily high. So what I'm just expecting is this bearish market structure to continue. All right, and if I had to put a probability, I would just say I'm 65 to 70% confident that the market's gonna go lower. That doesn't mean I'm gonna be profitable on the trade. All right, it just means that I'm gonna place my risk, adjust my stops accordingly, and take my chances. But really, the analysis is all there. And you guys will probably notice that I don't have every single PD array on my charts. I'm just looking at the ones that make sense to me. So I'm looking at liquidity pools after they've been taken out. And I'm looking at specific levels that just are obvious, right? It's extremely obvious that there's lots of buy-side imbalance that can be filled to the downside. Like, what about all of this? This is a massive, massive buy-side imbalance. So let's see if we invert this inverted fair value. Even on the 15-minute, we can see if we invert this fair value gap here. We're coming up on the 4-hour closure. Right, so you get the hourly candle. This long wick is what you should be looking at if you're just trying to trade the next hour. All right, don't fight the markets, what the markets are telling you. All right, so any idea that you might have of a Tuesday low of week goes out the window when the market is going to tell you otherwise. Because there's a lot of other information that we need to focus on, right? This is an all-time high back here. We took out the high, and look what's happened. It hasn't really done anything. Even me targeting this, which is a 1-to-4 risk to reward, or reward to risk, it's not even asking for a whole lot. I'm just looking for some type of retracement to fill in some of this imbalance. So we're about to get a nice bearish 4-hour candle closure. I mostly market order. So we've inverted, we actually took out the CPI low, right? So this is, to me, is a very clear indication that this was just a manipulation. All right, so you have this inverted buy-side imbalance now. But let's see if it wants to continue lower to take out Tuesday's low. Oh man, that stinks, Rosario. Yeah, it's always important to just double check which instrument you're on. Look how nice this retest of the weekly open was. It doesn't get more perfect than that. I've already mentioned that I'm still looking for these lows down here, so I don't really know. I mean, I'm gonna be honest with you guys. I don't know where the market's gonna go any day. I just try and place my manage my risk, have some idea of where the market might go, but there's no guarantee of where the market's going to go, to be honest. I'm looking for prices down here, but that's all I have. All right. So if you're in a short, all you're looking to do, you have to understand the time frame that you're trying to trade in, and how long you might have to hold the trade. So if you're just trying to day trade, you should just have an understanding of when you want to get in and out of the markets. So if I'm just trying to day trade, I just want to be in and out by, noon. Can be as simple as that. If you're a swing trader, then all you have to do is just understand, how long do I need to hold the trade for? It might be, it might be anywhere from 4 to 2 days, 4 hours to 2 days. But other than that, managing your expectations really just comes down to not having a clear, 100% idea of where the market's going to go on any specific day. Because I don't know if the market's going to get down in Tuesday's low. All I could do is manage my risk appropriately. Nice job, Abdullah. That's awesome. Yeah, definitely. I definitely missed out on some of these foreign shorts. But lately I'm trying to focus more on futures because I'm worse at it and I want to get better at it. I think somebody did the analysis of my live trades and it doesn't really make me too happy that I'm like break even on indices. Right, Forex to me is, I've already have that market pretty much mastered. I'm still trying to get used to futures, which I think the transition it's fine. I'm struggling to get the same returns, but that's normal when you're switching instruments. So like even if I tried to trade gold right now, I'd probably be terrible at it. So 1 minute ago, we're about to get a strong bearish close on the hourly and a pretty strong bearish close on the 4 hour. No, I wouldn't say strong, but it's rejecting some of that buy side liquidity. It's kind of a mix of everything. The price action hasn't been as clean, and it's more of an intraday market. I haven't taken a trade recently in FX, to be honest. I haven't taken a trade in FX for the last 2 weeks. So if you're looking for any of the trades that I've taken, I've posted them in the live trading section. So I avoided FX just because of the elections. But I would say the recent trade that I took was just back here, which you can go and study when I took that short in here. So NQ really breaking down so far. Just got our 4 hour close. See, quite bearish. All right, and this bias was already created yesterday. Like I already have the plan in my mind of going short. So even if I see a buy side imbalance, I don't care about the buy side imbalance that appears intraday. All right, because that's not how I should be trading. If I already have a bias for the previous day, I'm ignoring anything that goes against that narrative because I want to see them fail. So if I see a buy side imbalance, all I'm looking for is to see it fail. I'm not going long inside of a buy side imbalance when I'm bearish on the day. All right, so you guys have to really, when you iron out a game plan, you have to stick with it. I took a loss shorting already, but I just re-entered short because my bias is still bearish. You have to have ultimate confidence in what you're doing, otherwise you're going to get chopped around in the markets a whole lot. You're going to see things that really aren't there, all right, and then you're intraday, you have no idea what you should be doing. Yeah, exactly. I saw the stats and I said, I hate NQ. That's the thing. I'm trying to get better at trading NQ. It doesn't move like Euro, right? A lot of the volatility is coming during the morning session. Whereas FX, I've had an easier time swing trading it. So you guys can see that, that 5 minute inverted fair value gap. No, I never said that this wasn't an A+ trade. That is an A+ trade. This is an A+ trade. If you were to get in up here, but when I'm trading, I'm not trying to focus on too many markets. And I think right now, I'm going to still be analyzing the FX markets, but because my focus is trying to get better at futures, I'm probably not going to be taking a whole lot of live trades in FX just because my focus is diverted. But these same setups, it's the same thing that you're seeing in FX, right? It's just a run on buy side liquidity when you have a daily bias, and then you're just managing the risk from there, right? You have a run on buy side liquidity when you have a daily bias, and then you're just managing the risk. You have a reason why the market should go lower or higher, right? With with New Zealand dollar, there's the sell side liquidity all the way down here. And then with NQ, there's a lot of buy side inefficiency that needs to possibly get filled in. That's really all you're looking for. Let's see if we take out the previous daily low. This has been a really great trade. I think I'm currently up like 400 ticks. Yeah. What I'm going to do is take off some of the position here. So I was short 9. I just bought 3 back. Or sorry, I bought 6 back. So I have 3 left. I'll switch my stream to the other screen. Yeah. So currently up 480 points. I hope you guys enjoyed the video, and if you want to learn more how you can trade live with me and get commentary just like the one shared in this video, then make sure you book a call using the link in the description. I'm only looking to work with the most serious students, so spots are limited. Also, don't forget to like the video, drop a comment, subscribe to the channel as I'm dropping free value every single week. I'll see you guys in the next one.